This on-demand presentation will go over the 2018 First Energy benefits for non-bargaining employees and what you need to know about benefits open enrollment. Today we will review the process for enrollment along with what resources are available to you, explain what's new for 2018, we'll review the benefit options available, give a quick overview of the Healthy Living Wellness Program, reiterate the other benefits that are available, and last we'll share where you can go if you have any questions. This year's enrollment will start October 16th and end at 5 p.m. on October 30th. You must take action if you are adding or deleting dependents, making changes to any plan elections, contributing to a health savings account or flexible spending account, if you are not eligible for an HSA but elect an HDHP medical plan through First Energy, if you're wanting to receive your employer healthcare contribution differently than how we have it set to default, if you're wanting to receive your Healthy Living Incentive payout, if earned, differently than how we have it set to default, and if you are looking to purchase additional time off in 2018 through the PTO purchase program. We do recommend that you log on to the open enrollment tool, even if you intend to keep the same elections as last year, just to verify everything looks okay. On October 9th, 1 week prior to open enrollment, you can log on to the open enrollment tool to review your personalized benefit options for 2018 and the rates for those benefit options, along with your benefits enrollment guide, which is a booklet that explains each of the benefits available to you in detail. There is a mandatory enrollment required for flexible spending accounts, health savings accounts, and to purchase PTO each and every year. The elections made during benefits open enrollment go into effect on January 1st, 2018. Now let's review the open enrollment process and resources available to you. All benefits open enrollment information can be found at myfirstrewards.com. Once you navigate there, click on the red open enrollment box. First, we recommend that you view your current 2017 benefits. Next, you will find tools and resources regarding your 2018 benefit options in that middle Learn section. And last, select. From October 16 through the 30th, you can log on to the open enrollment tool to select your 2018 benefit elections. There are many resources available to you on myfirstrewards.com to help you decide which plans make the most sense for you. Now let's review what's new for 2017. A few medical deductibles are increasing slightly. This is a change that the IRS requires in order to allow employees to continue to contribute to an HSA. HSA limits are increasing, which allows you to contribute a bit more in 2018. FSA limits for the healthcare and limited FSA will be increasing, and the carryover feature will go into effect for those that elected the 2017 healthcare FSA or limited FSA and have money left over at the end of the year. And last, the Healthy Living Wellness Incentive for spouses and domestic partners who are enrolled in a First Energy medical plan is increasing with the payout in the beginning of 2018. Another thing that's new is our Be a Better Consumer campaign. Being a better consumer of healthcare starts with being a good shopper. The healthcare system is complex and can be challenging to navigate at times, which is why First Energy kicked off a monthly educational campaign, Be a Better Healthcare Consumer, to share helpful tips, tools, and resources so you can use your healthcare dollars more wisely. You pay medical plan premiums and a percentage of your healthcare bills, so it makes sense to be a better consumer. This slide shows a series of healthcare consumer education items for the year. We began with a kickoff in June with an on-demand webinar to educate employees to be savvy healthcare consumers. We are continuing to share topics featuring important education, tools, and benefit components. Details can be found at myfirstrewards.com/betterconsumer. Now we'll go over your healthcare benefits. Anthem Blue Cross and Blue Shield is the carrier for all First Energy medical plans. We will offer the same 3 medical plan options in 2018: Consumer HDHP, Enhanced HDHP, and the base PPO. The differences between the medical options are the premiums you pay, the annual deductible amounts, the way the deductibles work, and how the prescription drug deductibles are satisfied. The deductibles and out-of-pocket maximums are the highest with the consumer and lowest with the base PPO, but the premiums are the lowest with the consumer and highest with the base PPO. All three medical plans have prescription coverage included. The medical and prescription expenses for both the consumer and enhanced HDHPs are combined into one, so any money out of your pocket for medical or prescription will collectively accumulate towards satisfying those combined deductibles and out-of-pocket maximums. This combined medical and prescription deductible is sometimes unexpected for some employees when they elect this plan, so be sure you understand this feature. Coinsurance, preventive care, and emergency room coverage is the same no matter which of the three options you select. With the emergency room coverage, our plan follows the true emergency rule, which means you should only use the emergency room in a true emergency. The bottom half of this slide shows whether you are eligible for an HSA. It also shows the 2018 maximum HSA contribution limits. Then the bottom two rows indicate which plans are eligible for a healthcare FSA and a limited healthcare FSA, and that the annual limits for those plans are both $2,600. We'll talk more about the HSA and FSA plans in the slides to follow. This slide shows how the deductibles and out-of-pocket maximums vary. Both the consumer HDHP and base PPO have what is called an embedded deductible. The family deductible and out-of-pocket maximum amounts can be satisfied by any combination of family members, but one family member would never need to satisfy more than the single individual deductible or out-of-pocket maximum amount. Now, the enhanced HDHP has what's known as a true deductible. If you have family members on your plan, no claims for any covered family member will pay at 80% coinsurance until the entire family deductible of $27 has been met. The way these plans work may be a factor in deciding which medical plan is right for you. No matter which medical plan you choose, it's important to know what options are available to you. Our Be a Better Healthcare Consumer campaign focuses on how employees can become better healthcare consumers. In order to help employees make the best decisions for themselves and their families, this slide shows an example of the cost difference when you receive care at different places. Emergency rooms will always be the most expensive, which could include a $250 copay if they determine the care is not considered a true emergency. Urgent care centers cost less than the emergency room, and so do the doctor's offices and retail clinics. You can also have an online appointment with a physician through your smartphone, tablet, or computer that has webcam access. Anthem members only pay $49 for a live health online visit, and that $49 accumulates towards your annual deductible. And don't forget that Anthem also offers a 24/7 nurse line that's free of charge. The phone number for the 24/7 nurse line can be found on the back of your Anthem ID card. CVS Caremark will continue to be our prescription drug partner. Our prescription plans have a generic drug rule. This means you must get the generic version of a drug if a generic is available. If a generic drug is available and you decide to purchase the brand name, you will pay the difference between the generic drug's price and the brand name price, in addition to the brand coinsurance. As stated earlier, the consumer HDHP and the enhanced HDHP include medical and prescription coverage. The deductibles count towards one combined plan deductible for medical and prescription expenses. The base PPO also includes prescription coverage. However, you will be required to meet separate deductibles and out-of-pocket maximums for the medical and the prescription plan. Benefits will be reduced for out-of-network services. Again, to receive the highest value for your benefits, it's important to stay in network. CVS has over 60,000 retail pharmacies in their network, or you can utilize the mail order option or retail CVS pharmacies for those medications that are considered long-term maintenance medications. Here are the 2018 medical and prescription drug rates for full-time employees. All medical plans include prescription coverage. There's no separate cost to have a prescription plan. You can see that the consumer plan continues to have no premium. These rates represent a 9.7% increase from 2017. These rates do not include the $200 monthly spouse premium. The spouse premium applies if you elect coverage for your spouse or domestic partner who is working at least 32 hours per week and is offered subsidized medical and prescription drug coverage through their employer. The spouse premium does not apply if your spouse or domestic partner is also employed by FirstEnergy. This is a snapshot of our interactive Compare My Plans tool, which is yet another way to help you become a better consumer. You can access this tool by going to firstenergycorp.com/comparemyplans. It allows you to evaluate the different medical plans that we offer. You simply enter who you are covering under your medical plan, along with the state where you live. You can select your claims experience level, and this tool will tell you which of the 3 medical plan options is the best financial plan for you. What is an HSA? The HSA is an optional plan that has a funding vehicle that allows you to set aside pre-tax dollars to pay for your out-of-pocket healthcare expenses. The money in the account earns interest, and it's like a 401k for your healthcare expenses. HSAs are portable. It's a bank account in your name, so if you leave the company, that account goes with you. Another benefit to the HSA is that there are no use it or lose it rules with an HSA. The account continues to roll over each year. An HSA can be used for medical, prescription, dental, or vision expenses. It can be used for you or any dependents you claim on your taxes. It can also be used now or later. It's a great way to save for retirement healthcare expenses. For more information on HSAs, you can visit IRS publication 502 or 969 and visit healthequity.com/firstenergy. If you have an HSA established with FirstEnergy and Health Equity already, you will continue to use that account. If not, an HSA will automatically be open for you if you elect an HDHP medical plan through FirstEnergy. Here are some HSA eligibility rules you need to be aware of. You cannot have other medical coverage, such as a spouse's health plan. You cannot be enrolled in Medicare or TRICARE. You cannot be enrolled in a healthcare FSA through yourself or your spouse. You cannot be claimed as a dependent on someone else's tax return, and you cannot have received veterans benefits within the last 3 months. Action is required if you elect the Consumer HDHP or Enhanced HDHP and you are not eligible for an HSA. If you're not eligible, simply call Health Equity and ask them to close the account. Contributions to an HSA can be made through pre-tax payroll deductions or through post-tax contributions directly into the HSA bank account. Your pre-tax payroll contributions are divided equally between the number of pay periods per year. Your HSA contributions are deposited into your account every pay period. Your annual HSA amount is not available on January 1st like an FSA. It works like a checking account. The amount you've contributed year to date is the amount available for reimbursement. The contribution amount can be changed at any time during the year. You don't need a qualified life event to occur in order to change your HSA deductions during the year. Simply contact the HR Service Center to make a change during the year. The 2018 annual contribution maximums are $3,450 for individual coverage and $6,900 for 2-person or family coverage. If you are or will be turning 55 in 2018, you're able to contribute an additional $1,000, which is called a catch-up contribution. To help you save now for future healthcare expenses, FirstEnergy will provide you with a lump sum healthcare contribution in the first quarter of 2018. Who is eligible to receive this contribution? Active employees, part-time and full-time employees, employees that are eligible for benefits on January 1st, 2018. The contribution will be based on your medical plan and tier as of 2018. You will receive your contribution in the first quarter. The healthcare contribution is defaulted into either your HSA or your 401k. If you elect the consumer or enhanced HDHP, you will receive $500 for an individual election or $1,000 for a two-person family election into your HSA. You can elect to receive your contribution in your 401k or as cash if you are not eligible for an HSA. Simply email the FEHR mailbox if you are not HSA eligible. If you elect the base PPO, you will receive $500 for an individual election or $1,000 for a two-person family election into your 401k. If you waive healthcare, you will receive $500 in your 401k. Action is required in the open enrollment tool if you want to receive your contribution as a taxable cash payment. Vision plan will continue to be administered by VSP. If you enroll in a First Energy medical plan for 2018, you will be automatically enrolled in the basic vision plan at no cost. A supplemental vision plan is also available. Contributions for supplemental vision are deducted pre-tax. If you elect employee-only level of supplemental vision, your family members will not be eligible for basic vision. There are no plan design changes for our vision plan in 2018. We will continue to use the VSP Signature Choice Network. With the basic vision plan, you do not pay a premium and there's no coverage if you go out of the VSP network. Like the supplemental vision plan, you are required to pay a premium for that plan. Like the other health plans, benefits are reduced or eliminated for out-of-network services. To get the best value from the benefits, stay in network when possible. This slide shows the rates for supplemental vision for full-time and part-time employees. There are no rate increases for 2018. If you do not make any changes to your vision plan during open enrollment, your vision plan will roll over into 2018. Delta Dental will continue to be our dental partner in 2018. There are no dental plan design changes for next year. Please note that orthodontia is not covered under the basic plan, so if you have dependents that will need orthodontia, you should consider the Plus plan. Like the medical and prescription plans, out-of-network coverage is provided at a higher out-of-pocket expense. To receive the best value from your benefits, use Delta Dental providers. Here are the 2018 dental rates. The rates have decreased from 2017. If you make no changes during open enrollment to your dental plan, then your elections will be the same in 2018 as they are in 2017. WageWorks will continue to administer our 3 flexible spending account plans for 2018. This chart shows the differences between those 3 plans. Action is required during open enrollment if you want to participate in any of these 3 plans. FSAs offer a convenient, tax-effective way to pay for qualified health and dependent care expenses for anyone you claim on your taxes. Contributions come out of your check on a pre-tax basis, which reduces the amount of tax you pay. Employees electing to participate in an FSA for the first time will receive a welcome packet and debit card before the end of the year. You're able to receive reimbursements using the debit card, mobile app, website, or paper claim form. Just be sure to keep your receipts. They are required for the FSA plan. Healthcare FSA. You're eligible for Healthcare FSA if you are not enrolled in an HDHP medical plan. The money can be used to pay for medical, dental, prescription, and vision expenses. Limited Healthcare FSA. If you are eligible for a limited Healthcare FSA, if you are enrolled in an HDHP, you are eligible. The money can be used to pay only for dental and vision expenses. Now for both healthcare and limited FSA, a complete list of eligible expenses can be found at wageworks.com. You can contribute anywhere between $26 and $2,600. The entire amount is available on January 1st. You can incur claims from January 1st, 2018 through December 31st, 2018. You must submit claims for reimbursement by March 31st, 2019. Carryover for Healthcare FSA and Limited FSA. If you are enrolled in either Healthcare FSA or Limited FSA and you do not use your total amount during the 2018 calendar year, up to $500 will automatically carry over into 2019 for you. Anything over $500 will be forfeited. You can continue to roll over money as long as you are an active employee. Once your employment terminates, you are no longer able to incur expenses. The amount you carry over will not impact the annual maximum contribution for the following year. Dependent Care FSA. You are eligible for a Dependent Care FSA if you incur eligible expenses such as daycare, before and after school care for children under age 13, or elder care. You're able to contribute between $26 and $5,000 per plan year. Enrolling in a Dependent Care FSA can save you up to $2,000 per year in taxes depending on your tax bracket. You are able to incur expenses from January 1st, 2018 through March 15th, 2019. You must submit claims for reimbursement by June 30th, 2019. You will forfeit any unreimbursed funds that remain in your account on June 30th, 2019. The carryover feature does not apply to Dependent Care FSA. Only the money that you contribute on a per pay basis is available to use for reimbursement. There is no debit card available for the Dependent Care FSA. You can submit expenses using the mobile app, the website, or a paper claim form. You can use this account generally for anyone you claim on your taxes. Refer to wageworks.com for a list of eligible expenses. Dependent care cannot be used to pay for healthcare expenses for your dependents. Here's an example of how the carryover option will work. Kevin elects $2,000 in his 2017 Healthcare FSA. He uses $1,200 by December 31st. $500 automatically carries over to his 2018 Healthcare FSA. Kevin forfeits $300. Kevin elects $2,000 for his Healthcare FSA in 2018. His $500 that is carried over from 2017 will provide him with a $2,500 balance to use in his FSA for 2018. You can find FSA carryover FAQs on the open enrollment page on myfirstrewards.com. Now we'll review a few reminders about our Healthy Living Wellness program. The purpose of the Healthy Living program is to develop a culture where employees are encouraged and rewarded for either improving or maintaining their total well-being. You are eligible to participate in the program even if you don't elect other FirstEnergy benefits. Participation is free, voluntary, confidential, private, and secure. Spouses and domestic partners are also able to participate in the program if they are enrolled in a FirstEnergy medical plan. You can earn up to $600 depending on how many points you've earned by the deadline, and an additional $200 if your spouse or domestic partner participates in the program. There are two requirements in order to earn the Healthy Living incentive. The first, you're required to complete the online health risk assessment questionnaire, which can be found on the Healthy Living website. The second is that you have to complete a biometric screening. Biometrics can be completed in an on-site health fair, at your physician's office, at a CDL exam, at an approved lab, or at an approved retail location. The form for this is available on the Healthy Living website. Simply contact Provant for details. Just a quick reminder, the program deadline for 2017 is November 10th. Visit the Healthy Living website at firstenergycorp.com/healthyliving for program details along with instructions on how you can earn an incentive. If you earn enough points by November 10th and complete the two required activities, you will receive your Healthy Living incentive in a lump sum in the first quarter of 2018. If you enroll in a FirstEnergy HDHP medical plan, your earned incentive will deposit into an HSA by default. If you enroll in the FirstEnergy base PPO or Wave Medical, your earned incentive will deposit into your 401k by default. You can elect to receive your incentive differently than how we have it set to default by taking action during open enrollment and making that election in the open enrollment tool. If your spouse earns an incentive, their incentive will be received based upon your incentive payout election. Now let's review other benefits that FirstEnergy offers to you, such as group life, long-term disability, life resources EAP, purchased paid time off, and voluntary benefits. MetLife will continue to administer our basic, supplemental, and dependent life insurance. For basic life, you are automatically provided with basic life insurance coverage at 1 times your annual base pay at no cost to you, and no enrollment is required. For supplemental life, if you would like to purchase additional life insurance, you can elect supplemental life during open enrollment. You may elect to cover yourself up to 10 times your annual base pay. You can increase your coverage by 1 level each open enrollment period. The coverage level and rate applicable to you will be available in the open enrollment tool. The rates charged for supplemental life are based on your age. If you are selecting supplemental life for the first time, or your coverage exceeds $1 million, you will need to provide evidence of insurability to MetLife. Dependent life. Eligible dependents include your spouse and your children up to age 19 or age 25 if a full-time student. There are 3 levels of coverage: standard, high, and premier. If you're selecting dependent life insurance for the first time or increasing the level during open enrollment, you will be required to provide evidence of insurability for your spouse. It is important to have an accurate life insurance beneficiary designation on file. Your beneficiary designations can be viewed and updated online at metlife.com/mybenefits or by calling MetLife at 866-492-6983. Evidence of insurability is proof that you are eligible for the plan and must be provided on a statement of health form before the plan can be put into effect. The statement of health form can be completed online and will be provided after open enrollment if you need to complete it. If you do not complete the form by the deadline stated, you will not receive the coverage you selected. If you do not make changes to your life insurance during open enrollment, your elections will carry over into 2018. Accidental death and dismemberment. Accidental death and dismemberment offers coverage if you should die, lose a limb, or lose sight as a result of an accident. The accident does not have to be work-related. We continue to partner with Access Capital. You are able to elect 1 to 10 times your annual base pay, with $3 million being the maximum. Coverage tiers include employee, employee and spouse, employee and children, and family. If you currently have AD&D and do nothing during open enrollment, your election will continue into 2018. Long-term disability protects you and your family if you become disabled by a work-related or non-work-related illness or injury by continuing a portion of your income. Basic LTD is provided to you at 50% of your annual base pay with no employee contribution. You may also purchase additional coverage for a total benefit of 66 2/3% of your annual base pay. The Life Resources Employee Assistance Program is administered by Beacon Health. This program is a confidential support, information, and referral service that's available to you and your household members. You do not have to enroll for this benefit. It's an automatic benefit provided to you at no cost. The Life Resources Program covers up to 5 free professional counselor visits per issue per year. If you receive counseling by video, there's no limit on the number of sessions. You are able to utilize this benefit via phone, in-person, and video counseling. This program also offers assistance in many other areas, including legal services, financial services, marital, stress, education, child, and elder care, to name a few. There are many additional resources available on their website at firstenergycorp.com/life resources. The Paid Time Off Purchase Program, PTO, is available to all full-time and part-time non-bargaining employees. You can purchase up to 40 hours of additional PTO per calendar year in 4-hour increments. Part-time employees can purchase a prorated amount of PTO based on their average hours worked during the year. You must make an election in the open enrollment tool to purchase PTO. All purchased PTO must be used in the calendar year for which it's purchased. Your purchased PTO must be used after you've used all of your banked and frozen vacation, deferred PTO, and annual PTO allocation. If you have unused purchased PTO, you must elect to have it refunded in December, or it will be forfeited at the end of the calendar year in which it's purchased. You also can donate unused purchased PTO to our CARE program. If you decide to purchase additional time off, the cost is based on your salary or equivalent hourly rate as of January 1st, 2018, and the number of hours purchased. The cost is deducted on a pre-tax basis and spread equally over all pay periods in the year. In this example, Doug makes $75,000 and decides to purchase an extra week of PTO, which is equivalent to 40 hours. We first take his salary and divide by the normal annual number of hours per year for a full-time employee, which is 2,080 hours. That comes to $36 per hour. Then you multiply Doug's hourly rate of 36 by 40, the number of hours he wants to purchase, to get a total of 1,440. So Doug will see this $1,440 deducted from his paycheck, but it won't be deducted all at one time. The $1,440 will be spread evenly over the pay periods in the year. Doug gets paid bi-weekly. So in a full calendar year, Doug would see a pre-tax deduction of approximately $55 on each pay statement. Mercer will continue to offer several voluntary benefits to employees. Group discounts and the convenience of payroll deductions are the benefits of enrolling in these offerings. FirstEnergy is not the plan sponsor nor plan administrator of these voluntary benefit offerings. However, the company has negotiated discounts on your behalf. You can enroll at any time in auto and home insurance, identity theft protection, and pet insurance. Then from October 16th through October 30th, you can enroll in critical care insurance and accident insurance. For more information or to enroll, visit FirstEnergyVoluntaryBenefits.com or call Mercer. If you have any benefits questions during open enrollment, we have multiple resources for you to use. You can visit the My First Rewards website at myfirstrewards.com. You can call or visit the websites of our benefit partners, and you can contact our HR Service Center by phone or email. If you call after hours, please leave a message and someone will return your call. Thank you for your time.